Let's now invite our market master for the morning. Andrew Holland of Ambit Investment Advisors joins in. Andrew, good morning. Thank you very much for joining us. It's been a kind of year which has not given much if you were a Nifty investor, but within the Nifty itself, several stocks have given fairly decent returns. For this month itself, December, what were you long and what were you short on? How has the month turned out?
So we're still positive for the month. So we've kept with our kind of banking sector theme, which has played out well. And on the short side, a little less on the short side actually. I think we've been a little bit more optimistic about the market recovery. So it's been a kind of month of two halves, really, hasn't it? 4% down in the first part and recovery in the second, and that looks likely to continue now. So we're keeping our enthusiasm kind of capped a little bit because there's not much happening at the moment, and stock movements are kind of, well, it's the rollover period as well, so it's always a difficult 2 days to do anything. So, but I think going into the new year, we're kind of we're staying on the long side.
In days of yore, Jan and Feb used to be the rah-rah days. People start buying ahead of the budget, imagining all kinds of goodies coming there. How would you look at January from here on? How long does it get? 8,100, 8,200?
I think there's a couple of things there, Latu, in that I'm thinking first of all, from a global perspective. I think the worries still remain around China and commodities. And then still that kind of stabilizes, the volatility is going to remain for markets. But I'm still optimistic that China will come out with some fiscal stimulus and that will calm all of our nerves. Yellen, into my mind, has given us a nice put option in terms of interest rates won't go up until the US and the global growth is strong enough to see that happen. So that's good for emerging markets. And I think the dollar will weaken in the short term, and that again I think is good for emerging markets and commodities. So the backdrop going into what you just asked is reasonably okay at the moment. And obviously if the RBI can reduce interest rates again, which I suspect they will, then obviously you could have that nice run ahead of the budget. But of course we'll all have high expectations again of what he can deliver. But last time around I thought it was a very, very good and sensible budget, and hopefully it'll be the same again.
Okay. Well, I have a couple of questions for you as well, Andrew. We'll do one thing. We need to take a mandatory Happy New Year to you in advance and to your entire team. I'm relieved to see you here. I was expecting you to be holidaying in some exotic location at the end of the year. But since you're here with us, one of the themes that Ridhim Desai was just talking about a couple of minutes ago was the possibility of 2016 being a La Nina year. So a year where we get bountiful rainfall. Is that your expectation as well? And if yes, how do you play that in terms of sectors and stocks?
Yeah, well, I'm not a weather forecaster. We're going to be in any new life that I might have, so I can't really kind of put all my bets on that happening. So if that happens, that's great, and I'm sure he's got a great theory around it. But for me, I'll stick to I'll boringly stick to our Who Supplies India theme. Which I think will continue to play out. I mean, even if rural consumption picks up, they have to buy something, and someone needs to supply them with whatever goods and services they want. So, that's the theme that I want to continue to play in 2000. Actually, for the next 2 to 3 years, we do feel that this theme is already across a number of sectors. It's operational gearing. So there will be different themes throughout the year, but I think this is one which will play out over the next 2 to 3 years, and of course different sectors at different times will take the lead.
Okay, well, let's continue our discussion on January itself. What are the themes or stocks you are likely to chase, given the backdrop that you just drew up for us, probable improvement in commodities because of a cheaper dollar and Chinese stimulus, and of course looking up to the budget?
So I think the banking sector remains, the key theme for us. We think, obviously, notwithstanding the fall in interest rates, which obviously be a beneficiary for them, as the economy picks up, we should start to see loan growth pick up. And hopefully we're coming towards, and I say hopefully because the PSU banks, I'm not sure I'd be so hopeful, but for the private banks coming towards the end of the kind of problems with non-performing loans. And I think that will be the sector which will lead the market higher going forward. So sticking with the private banks for the time being, and I think that's going to, if the bankruptcy law also gets through, that's a game changer. I hear lots of negatives around it, but if it just gives the banking sector the ability or capability to force companies to think twice before taking loans, I don't think that would be a bad thing for the sector.
Absolutely. There's also that NIIF, National Investment Fund, that got off the ground, so to speak, yesterday. Still looking for a CEO, so it'll be a while perhaps before the money comes in and starts getting invested. But is there, how are you approaching that concept, and what stocks might you buy?
So again, it's, we're looking at where the government's spending money, whether it's transmission and distribution, railways, all of these, government expenditure. In fact, I'm more excited about the railway expenditure because it could add significantly to GDP. We just need to see more contracts being awarded. But I think that's going to be one of the catalysts for the economy. So, play around those, look for companies which supply into those sectors. Is what we're focusing our kind of efforts in the next, well, have focused our efforts, and we'll continue to look at investments. I think the other interesting one is commodities, and whether is it too early or too late to start buying. It's not too late, but is it too early to start looking at the Tata Steels and the Hindalcos? We're kind of getting there, but you need a catalyst for those share prices to move high, and I think stability is the key there. But the valuations are looking reasonable to start thinking about those sectors again, which we haven't done for some time. And probably against the trend of what we're thinking generally about housing and real estate. Maybe that goes through its problems over the next few years, but it doesn't mean that the real estate stocks which are listed couldn't have a rally. They're all kind of restructuring themselves, getting themselves in better shape. So it's a sector we're starting to look at as well going forward, but it's a little bit early, but it's what we're looking at.
Not bad. I didn't expect you to talk about these beaten down sectors, so soon. I mean, metals has been a taboo for a very long time, but now there are people talking about a rebound. What about the other commodities? There's been action in the sugar space that we've seen. We were just discussing how there could be a turnaround in the cycle as well. Would that interest you? And there are a couple of other pockets as well, the likes of defense, aviation. These sectors have now come back into the limelight. Anything there?
Sugar I know nothing about, and probably won't know anything about. To be honest, it's a trading. To me, it's more of a trading on the kind of ahead of news and sell on as soon as it breaks. Aviation, I've been asked a few times, and I was trying to think back of when Jet Airways was first listed and the euphoria around it, and those days of so many people were, the telecom sector, kind of how it's going to transform into the kind of aviation sector. I mean, it has been a good success story, but I can't get too excited at these valuations. So again, playing it slightly different. If people are traveling more internally, as well as foreign travelers coming in, whether for business or for holidays, the hotel sector's got to be a beneficiary of that, and they have operational gearing as occupancy rates rise, and obviously they have pricing power. So I'd like to play it a little bit away from, say, the aviation sector into the kind of hospitality area.
All right, Andrew Holland, pleasure speaking with you. It was a nice note to end this conversation. The hospitality industry, we have been denied our year-end holidays, but yes, there is a crowd out there, and I guess it's going to be good days for the hospitality sector as well after a long gap. Thank you very much for joining us, and have a great 2016 yourself, Andrew Holland.